Hey everybody, I wanted to get a new podcast out in regards to a new program in Ohio that just launched recently that's been approved by the Ohio Bureau of Workers' Comp to offer workers' comp as an alternative to the BWC program there that allows agents to earn commission finally and also reduces costs to the clients around 20-30% or so, and also can streamline the claims process for the client and offer a pay-as-you-go billing model versus what they're up to now in regards to having to do some prediction every couple of months of their premium and get in a true-up scenario with the BWC. And I know a lot of agents in talking to them have never sold workers' comp in Ohio, so they asked that we put something together that covers sort of the basics of how the Ohio system works. It's very different than what we're all used to in the other states that are, non-monopolistic states. And so I think this will be a really good educational piece for your agency and the staff in Ohio. And I know we'll be sending this obviously to agents who are focused on multiple states in the surrounding states like Michigan, Pennsylvania, so on. But nationally, I know I've spoken even to clients in California and agents in California that have business there. And so I think it'll be beneficial to a lot of folks. So please enjoy, and we'll talk to you soon. Welcome to Insurance Shop Talk. This is the podcast where the world of commercial insurance gets a little closer to home. I'm your host, Eric Stein, and in every episode, we're taking a deep dive into the insurance industry, from the latest news and trends to in-depth interviews with InsurTech experts, carriers, and agency newsmakers. We're covering it all. So sit back, tune in, and let's start the conversation. My name is Eric Stein. I'm with Insured Solutions. We also have Bob Butts with us with Alternative Comp Solutions, whose background has been with the BWC in the past, and he is running the Chief Risk Officer for Alternative Comp Solutions, a new program in Ohio that we'll be covering. And Bob, thanks for being on. I appreciate it.
No, no problem. Just correction, I never worked for the BWC. I've just been dealing with them for almost 35 years.
Oh, okay. For some reason, I thought you worked there. All right, no
That's
problem.
Paul. Paul Holiday is the one that worked there.
Okay, got you, got you. Thanks for the correction.
All right.
Um, So today we're pretty excited to cover some of the basics of workers' comp in Ohio. After meeting with several different agencies within Ohio recently, when we brought up the concept to say, hey, I've never sold workers' comp before because it's monopolistic, so we never had to. We kind of are lost a little bit. We've sold workers' comp multi-state, of course, but not in Ohio, and it is a whole different animal, as Bob will get to. So. We're definitely going to get Bob's expertise into covering that information, and then also the reasoning behind the offer is that we now have a way for agents to earn revenue with a new AEO program that was approved. So we're excited to cover that. For those of you that were on the original webinar back in August, this will be, we'll just do a little recap for you there. But for those that are new, you'll be very excited to kind of see the process of the new program that's available for your clients. And again, wait for you to, help your prospecting for commercial package, kind of round out the account like a lot of agencies can do with workers' comp now in outside of Ohio. And then secondly, with the fact that you can actually, you know, basically be able to use workers' comp now as a means to, kind of lead into with your prospects too. But for those of you that are not familiar with us, because have not really been active in Ohio until now because of the new program that's available. We Insured Solutions we are a wholesale agency nationwide. We specialize in workers' comp. We are a referral partner for Alternative Comp Solutions that Bob is with. They're based in Cincinnati. And we work only through the property and casualty and medical insurance folks to get our submissions in place across the country. And so that'll be the same approach we're going to be using, obviously, in Ohio as well. And then And then Bob, I'll let you kind of cover, ACS.
Okay, well, ACS, Alternative Comp Solutions, we're an organization that started up about 3 years ago, and we'll briefly touch on what an AEO model is here in a little bit. But basically, we offer services not only dealing with workers' compensation, but we also do payroll administration. We also do HR services, safety services, unemployment services, and everything under the sun. We're also attached to a staffing agency and perm placement agencies, healthcare staffing. We're part of what's called the Riley Decker family of companies. And so it's pretty much a lot of the back office and type of services that you would see from a lot of other PEOs or AEO, or not AEO, but ASO service companies.
Absolutely. And Bob, you want to cover kind of the difference between, or what is the new AEO? Because a lot of folks on this call haven't been exposed to it yet. And how does it differ than the traditional PEO or professional employer organization that is also an option in the city or in the state?
Right. And AEO is an alternative employer organization. It is somewhat of a unique animal for the state of Ohio. It was passed by Senate Bill 201, I believe about 3 years ago now. And what it is it allows organizations like ourselves to go in and provide these back office services, the payroll administration, tax filings, and any other sort of back office they need from HR to safety and that type, and then thereby also being able to have them put onto our workers' compensation program. And that's sort of what has kind of spawned these conversations. Is there's now an alternative to just the BWC, even though that not everything works. Not every program's perfect for everybody. But the difference between AEO and the PEO, which provide the same services, is under the PEO, the client's taxes have to be filed under the PEO's FEIN number. In the AEO world, the taxes are filed under the client employers. So there's no real change from the payroll systems that the clients are utilizing today.
Yeah, that's really important difference that, again, the payroll service can be continued by the client. A lot of times that does disrupt the client's flow and processes if they have an internal system, or maybe they're just with a vendor like ADP or whoever that they've been with for quite a while. It's hard to change on a dime. That's been a big objection with the PEO model. So now finally it's worked out where as you may have used in multiple states before, this new pay-go type reporting can really help the client in terms of a cash flow and such. So we're really excited the fact that they do not have to change payroll in order to use the AEO model, and it really helps them with their billing as well.
They don't necessarily have to change, but just to clarify, we have to be engaged with the payroll process in some manner. So either we have to have an arrangement with their payroll provider, or we provide the payroll services. That's a distinction. It's something we work with almost all the major payroll companies at this point.
Yes, yes, that's thanks for doing that. And it's a big convenience actually, because as you know, and as an agent, if you sold work comp multi-state, the client's got to fill out a form and put their payroll data in each pay period or month. In this scenario, the ACS team, the AEO, will be able to, with the client's permission, download that information each pay period and kind of do all the heavy lifting for the client because of the requirement to have access to the payroll data, and kind of create the invoice for the customer to make it more convenient for them. So just another step that's handled as a service as part of the AEO, in my opinion, that's not done now with multiple carriers around the country. And then Bob, this is kind of the highlights of the AEO if you wanted to cover.
Yeah, I mean, right now, there's an opportunity for agents that if they were have somebody that would fit our model, like I said, we're not a perfect fit for everybody, but if they do, that's something that we're able to pay commissions based upon the fees that we collect for the services that we provide, which would include the workers' comp and the payroll, if that's in there, any of the HR or anything like that. So there's some opportunity for revenue that they may not have seen in the past. But we'll talk about how they still can make revenue on even staying with the client, staying within the BWC here in a little bit. But our program can save the clients, somewhere between 20 to 30% possibly more, sometimes less, but it's a different type of program to look at. And then, like you were talking about, it's pay as you go, so there's no true up after the first year. The clients know what their real time costs are throughout the year, and the like. And then, we're also targeting industries that normally most outside of Ohio, most people try to shy away from. But, our targets are construction and trucking, logistics, healthcare, those type of things that typically people would think they're the riskier ones, but that's also where the premium is.
Absolutely. And then the other cool thing I love as an agent, I know you agents are going to love it, is that if the client's already with the BWC, they just have to complete one simple form that's provided by the BWC called the AC3 form. And it's really simple to fill in the policy number and the client legal name and such, sign off on it. That would allow ACS, once we receive it in to Insured Solutions, to pull down the data behind that program they're with and do a comparison of where they are now with the BWC, or maybe they're with another like PEO or AEO, that we could do that. And then if it's a newer company, we would need the Accord. Multi-state would need the Accord, and we can handle multi-state. ACS is just adding in a national carrier now, so that's going to be really convenient especially with the contiguous states to Ohio. We would need an Accord for that. And if the client is with an AEO or a PEO, we would need loss runs and Accord from the AEO or PEO. But again, we'll get into those particulars later. Just note that in majority of the time, like 90% of the time, a one-page form is going to be all we need to get the client a quote so you can do it. And then what I like to do is review that with you to first kind of walk you through the process and go from there. So Bob, now why don't we just start diving right into the basics now?
Okay, yeah. Most people know Ohio is a monopolistic state, so you only have really a couple options when dealing with the workers' comp, and it's to be in the state pool, and where the vast majority of employers are, or you can be a self-insured employer inside the state. But those are for your much larger employers like a Coca-Cola, a P&G, or somebody like that. We are self-insured as ACS, so that is what allows us to kind of be able to kind of have competitive rates against the BWC in some cases. All right, and so the employer takes out the coverage. The BWC's policy year is from July through June. So every year there's new rates that get published in the spring, and the employers start seeing where their rates are going to go around April, May time, and that's when they start saying, okay, my rates have gone up. What can I do? But a lot of times they know this a lot more in advance than that. So, the BWC has actually been a pretty good over the last few years. It's had about a 20-year run now of decreasing costs. And amazingly, Ohio is in the top 5 as far as lowest rates in the country.
Yeah, I think that the one quick thing about the timing, again, for you as agents to note that the notices of clients that are in some of these different programs will be coming out after November, you said, Bob?
Yeah, right around November 1st, when we'll talk about the group rating program, but most employers are participating in one of 2 different type of group programs, and the group experience rating people are getting their notices if they're going to be renewed into that group come around the 1st of November. And that's when they're going to start saying, okay, what are my options going to be going into next year? Should I be getting, dropped from one of these groups?
Right. Yeah, sorry, I kind of jumped ahead there, but
Yeah.
and then as far as the next slide, maybe kind of go through what clients are, have in place today as far as their claims management.
Yeah, I mean, the BWC, some people find it mysterious. I'm one of those who've been doing so long, it's sort of second nature to me. But the BWC is actually broken up into several different components. The Bureau of Workers' Comp, and they are rate makers and claim administrators. And so they're the ones who kind of, set the rates, and then they also determine the compensability of the claims. But back in the 90s, they realized one of the things that they don't do well, that they could do better, was on the managed care of the claims. And so they decided to outsource the medical portion of the claims to a bunch of MCOs. And over the years, it's kind of dwindled down. I think there's about 13 MCOs inside the state. Every employer has an MCO, and they actually kind of work. The MCO technically works for the Bureau. And so some people say, well, I get to choose my MCO. That is true. But by rule, they are actually represent the BWC. And so BWC was formed with the notion that they're there to protect the injured workers in the state. So one of the things I put out there is that when some people say, hey, BWC doesn't seem fair at times, well, the system really wasn't set up to be fair because the BWC and MCOs must err on the side of the injured worker. Now, that's not a bad thing. It's just kind of the way the system works. And so to do that, in order to protect yourself, a lot of employers inside the state also have a third-party administrator or a TPA. That's somebody that the employer hires to go out and represent them in matters concerning workers' compensation claims. Now, where this comes into play a lot of times is in what's called the Industrial Commission. That is a secondary, not secondary, it's the second component to the workers' comp in Ohio. The BABC is, like I said, the rate makers and the claim administrators. The Industrial Commission is the adjudication branch. Those are the ones who make the decisions when there's a dispute in a claim, whether it should be allowed or additional conditions. And there's three levels of hearings in the Industrial Commission. There's district hearing officer, staff hearing officer, and then the review panel, or called the IC review. And then you can take it into courts. But that's something a lot of people, complain about is, the representation inside the Industrial Commission. And that's where agents can help out by saying, listen, I know some people that can, help you to defend this case better. Okay. Now, inside Ohio, its system works to where you get a rating or a mod. Most people are familiar with what mods are. A mod basically is how you look against the rest of the industry in this case, in the state of Ohio. So one mod means you operate on average, on par. If you're below a one, let's say a 0.8 or a 0.7, that means you're doing better. And so then therefore you get discounts off those base rates. If you're above a one, that means your claims are slightly higher or greatly higher than the industry average, which means then there's going to be a penalty or premium put on top of the rates, and you pay additional premiums on top of that. And so that's where when you have a client, they're a lot of times going to say, hey, I've had this claim, my mod's going up, I'm going to a 1.2 or a 1.5. I don't know if there's anything I can do to get that down. That's where, once again, you could be the trusted advisor, say there are things you can do. I may not know what they are, but I know people who can tell me, and then you can refer them over to us, and then we can consult with them on the various programs inside the state. So the two biggest programs is group rating and then group retro. Group rating or group experience rating, that's where a collection of employers are pooled together, and they then are rated based upon a singular mod. So they take the experience of everybody and the payroll of everybody and determine what would that mod look like. In the state system, they have suppressions where they have these factors put on. It's called the credibility factor to be able to suppress, if you're a smaller employer, the impact that any one claim might have. Well, it also impacts the amount of discount you possibly could get should you have no claims. And so that size factor really kind of hinders a smaller employer, even if they have a really good rate. What group experience rating does is allow us to pool a bunch of those small employers together, treat them as one large one, and then thereby getting them possibly up to the maximum discount of 53% should their experiences be that good. And so group experience rating is generally for those with a below one mod, and they're pooled together. And so generally right nowadays, you're probably seeing, you've got to be a 0.9 or a 0.8 or better to really have it be a benefit to you. The second one is group retro. What group retro is for the lower credit rated and it's really for the penalty rated employers out there where they're pooled together, not by a common EMR or mod. Everybody pays their individual mod. What that grouping is they take a look at the claims experience over that year. And after a couple years, if that claim experience performs well, the BBC is going to go and give them a rebate back. And so the clients could earn rebates by being in these group retros up to, there's a varying amount of discount or rebate they could possibly get, but it has to do with the experience of that entire pool. The one downside of that is you could be a great performer in that pool, but if somebody else has a major claim or a few of them have major claims, you could end up paying more in premiums if that claims experience goes awry. So you really want to know who you're being pooled with. You want to know the underwriting that goes into developing that pool to make sure that you're in a pool that's not going to end up being in a penalty situation and you end up having to pay more premiums than what you initially had to pay.
Hey everybody, it's Eric. I just want to pop in for a quick announcement. Exciting news. I just launched my new book on Amazon. It's called The Blueprint, an insurance agency's unconventional rise to the top. And it goes through a little bit about how I built the agency Insured Solutions since 2009 to today. And the blueprint in terms of how I actually did it with the tech stack, the offshore, nearshore talent, and digital marketing techniques that I use. So pick up a copy today on Amazon. Thanks, guys. And Bob, are they grouped in certain industries typically, or is it all sorts of industries? How do these
Yes, they're
group
grouped by
retros?
industry classification. So manufacturing with manufacturing, construction with construction, service. So everything's grouped in those manners. And so you're not like if you're a roofing guy, it's not like you're being grouped with a bunch of nursing homes and vice versa. All right. So that's actually kind of where you can have a say, because if you're in one of those group pools, generally you know your industry, you might know those other players, and you know who you want to be in with and who you don't.
And then Bob, yeah, now finally, since I jumped ahead, get into the timing again of when clients know, if they're going to be in or out, and then get their notices, and
Right.
what give kind of a timeline of what all is happening at the moment. Like we're in the middle of it now, I guess.
Yeah, group experience rating, those groups are put together and filed here at the end of November. So that's where there's a lot of activity going on right now with all the TPAs in the state by trying to pool, grab all these clients they can and put them into these pools. And that's also where come by November 1st, if you're being dropped from one of those pools, you get the notice. And so therefore you can start looking at the other options. Group retro is purposely then filed in February to give employers who are being dismissed from a group a chance to go and find that group retro program to be in order to try and maybe save some money in the long term. But there are other programs that also, since the rates are going up, there are other programs that the employers then need to also look at to say, how can I stack additional discounts throughout the states and various programs in order to try and drive my premiums down?
Got it. So good timing to be in touch with people, clients, to see kind of what their scenario is. Are they going to be in or out? I did just speak like to an agent recently that was saying actually his their own agency was getting booted from one of the programs because they did have one really bad claim that was fraudulent, and they wanted to actually look at an AEO model for their actual agency. So that's just what's happening in the market at the moment, and good timing to start reaching out to clients now to
And
talk
that would
through.
be the good example of also where, we differ slightly than the group, not slightly, we differ from the group retro is that we're going to base the premiums that we're charging the clients based upon their own experience, as opposed to a group retro where they have to wait a few years back or a few years to get that refund back. We're giving them that savings in the fees right off the bat.
So we should, like, if once we get that quote in, we should be hopefully at or below where they were in the retro, right?
Right. So, we're also a device to try and mitigate that increase. If they've got that bad claim, they're seeing an increase. It's just how do we manage and which program is going to be best. Once again, our program's not best for everybody. Group retro is not best for everybody, and group rating's not best for everybody. You got to look and really do a good study to say what's going to be best for the individual employer.
Makes sense. And Bob, kind of, I know it's a huge list, but you could just touch on the general concepts of what's available to a client now within the BWC retro, group retro, and so on.
Yeah, so there were other programs out there as well. There's the Grow Ohio initiative. That's for a new employer coming into the state. If they're just signing up, they can go and get some discounts right off the bat and save money. Should they want to jump into a group, or the state's going to give them a discount off the premium, off the base rate right off the bat. And that's to incentivize employers to open up in Ohio. The Better You, Better Ohio Health Program, that's another one where they just rolled out a few years ago, where they're trying to promote healthier lifestyles. That's going to bleed over to workers' comp claims. A lot of people don't understand the healthier employees are in their everyday life, the healthier they're going to be on the job, the less likely they're going to run into some kind of injury, especially the repetitive injuries like a back injury or carpal tunnel, the more physically fit they are, the likely that they're going to drive their claims down. There's bonus and rebates incentive program, traditional work grant program. The BWC does have that program where an employer can apply, and if he puts his people back to work on a transitional work, then he can get some additional monies to help pay for some of those costs. Then we already talked about group experience rating. There's the 15K medical only program. That's where the employer says, hey, I'm going to pay the first 15,000 of any medical only claim, and thereby keeping those charges off their experience, which then helps them keep that mod down. Now, once again, that's not best for everybody because it depends upon the amount of claims you're having. And you have to do a study to say, if I did pay those claims, how much would my EMR go down? If you have a lot of medical only claims, it could be significant. If you have a few medical only claims, but you have more indemnity claims, it may not work. So it's, once again, you got to do a study, got to look and see if that's going to work well for you. There's also the safety grant program the state has through the Division of Safety and Hygiene. That's where employers say, hey, I'm going to make some modification and changes within my organization to try and drive down the injuries I'm having. They can apply, and there's certain industries and certain types of job classifications that are eligible, but it's something to look at and say, hey, if we go and do X, Y, and Z, will the BWC give us money? That's, once again, an investment on the BWC's part to help drive down claims. Firefighter exposure and environmental elements grant. That's for the fire departments inside the state of Ohio. There's a school safety grant. There's also the substance use and prevention and recovery program. That's used to be called like the drug-free program. That's where incentivizing, once again, a healthier lifestyle and try and drive down the needless accidents due to, people being, either high or drunk on the job, and trying to control, the safety in the environment. The BWC has done a great job in trying to promote a lot of safe working programs. And so that's where the BWC has been able to help drive down their costs. It's not just been by great investments the state of Ohio has had this lucrative time. It's by driving down the total number of claims inside the state. And that's one of the things that kind of sometimes goes, overlooked when people look at what the BWC's done in the past 20 years.
And then Bob, yeah, kind of walk through the claims model of how that works within the BWC, and then maybe compare that to what happens with the AEO model.
Right. Well, there's really no difference when a claim occurs between an AEO and what happens in BWC because under our AEO, we are a self-insured employer, which means we do take on the responsibility of administrating these claims. But the actual process of the claim is exactly the same. There's no difference in the benefits that the injured worker would receive. There's no difference in the rights and rules that they would have. And so we have to administrate it just like we do the BBC. But that's where we try and strive to work hard to make sure that the claims are fair and adjudicated quickly, and we get the people back to work and we get them the health and the care that they need right away, so that we can drive down the costs as well. But when an injury occurs, they report it to their employer. They go seek treatment. That the claims are filed within 28 days. And that's to either the MCO or to the BWC. And so those claims are then filed. Injured worker has up to 1 year to file a claim. Obviously, the longer they take to file it, the more scrutiny that claim should be looked at. And then, like I said, the BWC has done a lot to try and promote the programs and managing the claims, like early reporting, return to work. They have the MCOs coordinating the medical care, making sure these people are getting the care they need as fast as they can. And so, that's something where employers need to make sure the team they're putting together help them manage the claims as best they can to try, and that's how you kind of drive your mods down to get the lower rates. And light duty programs is an essential to try and drive down the rates because you don't want these people off work because indemnity costs will raise your mods, as well as people generally, the longer they're off, the longer it takes them to get back to work. I know that sounds, kind of counterintuitive, but the quicker you get them back, the better. They heal and they get back to full duty faster.
And it prevents a lot of fraudulent claim activity too. Just get them back in the office, doing something productive if you can.
Right.
Um,
Exactly.
and then Bob, I'll jump in on this one as far as the playbook in terms of agents now. Like, how do you operate in this new environment? As we referred to in the beginning, you can now use workers' comp as a lead-in for new prospects. So if you've got some producers that are out, beating the streets, they can talk about workers' comp now because everyone has to have it, which we would hope would then lead into the commercial package and rounding out the account. If you already have the client, then of course reaching out there to let them know you can now offer workers' comp. But some discussion points you can get into is like, do you know what your current experience mod is? Um, and that way you can tell like how their claim activity is going. The higher the mod, the more savings the AEO can offer them through the ACS program as an example. And then Bob can help with this piece, but all those list of safety incentives that they can now have in place? Are they taking advantage of all that are applicable to their industry? Um, and then
Yeah, I think
go ahead, Bob.
Yeah, Eric, I think what Eric and I are trying to set up is, for the history has been that you guys have felt like maybe I don't have a resource or there's no way I can help because it's monopolistic here in Ohio. Well, that's not true because as you being a trusted advisor with your clients or with the prospects you're trying to pick up, now you can come in and say, I know some people who can really take a look at your entire program and help me help you decide what's the best program for you. Group retro. Is it also being in some of these other discount programs? And that's where we want to help you by being the expertise to say, let's take a look at everything. Because once again, not one thing fits everybody.
Yeah, so I think that's important that we're not gonna if what's Bob, what I've noticed when I'm getting my quotes back for agents that if Bob can't help them right now, he tells me why, gives me the information to pass on back to you, or we can get on the phone with Bob and his team to talk through options there. So we're not going to just leave it out in the cold. We're going to, give you a plan of action for the future as well. But hopefully we get a good cost comparison and we can help them immediately. But if not, that's okay. We'll
Yeah,
talk to them in another period.
I love it when you get frustrated and I tell them, hey, they're in a good situation. I can't do any better than what the state's got for them right now.
Right, right. I'm not used to that. And then every August 31st is when the true up happens with the BWC because the client currently is having to predict what their premium is and then pay in every couple of months. Again, the AO pay-as-you-go process helps eliminate a lot of that. So you could ask, what's coming up in the future? Are they going to owe money now, which is a big pain point as well. Oh, and by the way, I forgot to mention that some of you are already putting it in. If you'll put in the chat or a Q&A box, any question you have, I'm going to get to those at the end. So as soon as you think of it, it pops into your head, please list that. And I would like to read through that in just a minute. We're about to wrap up. Also, please do offer any kind of analysis of where they should be, or Bob will let once we see the AC3 information and the information he's going to gather from the BWC can give some of that recommendation about what they would be a best fit for if the AEO is not really a good fit. What saves the most money. And again, I would urge you, once you hang up this call, think about clients you have and let's get a test quote going because the simple form of the AC3. And I will send out a kit, by the way, at the end of this call to everyone in case you don't have it. If you're thinking of it now, on the BWC website, if you just hit the search bar and type in AC3 form, you can download it there also. But I'm going to be sending out info after the call as well as a recording to pass as well. And then we've also created for you, because again, I want to try to make this as painless as possible for agents because I'm with you in terms of, how, important it is to get the marketing in place for workers' comp today in Ohio. We have some email templates you can send to clients, current clients, as an example, to let them know in a brief way that you can now offer workers' comp and then, attach the AC3 form. I've got some brochures that you can actually customize in a Word document with your agency name and your name and logo. So it's more, pertinent and white labeled to you. I've got decks and info that we can do at your agency and some other prior webinars to promote the workers' comp in Ohio so we can get your producers up to speed of what you're learning here today. I've got email templates for prospects you could use and telemarketing scripts as well for producers of just some touch points to make sure they cover to let them know they can now, there's now an option for workers' comp there. Also, I'm really excited to offer you a new lead program. We've put together some data on Ohio employers by industry, by city, with their mod and all kinds of great info in the right kind of size. You know, some of the somewhat of a larger premium accounts, so that we can target market for you some businesses in your city in Ohio. All I'm asked that to get included in the program would be just to send me one AC3 form to get qualified from any prospect or any current client, just to so I can walk you through the quoting system. Whether you sell that or close that or not, it's irrelevant. I just want to get the relationship started in terms of a submission. Once you do that, then I'd like to see if you're interested in getting some free leads. We'll start out by just providing the information. It does have like the owner name, the email address, contacts, mod, all of that good data, so you can quickly get that to your producers to use. And what we'll do with soon we'll be offering also some where we'll telemarket and set appointments for you too. We're just trying to drive this submission model, and that's what we've done in the past with some other programs around the country, and it works really well. So we'll start again by giving you just some free leads, then that are very targeted in your city, and then we'd like to start scheduling meetings for you and your producers if you'd like. So please do, send an AC3 form in to me so we can get the relationship going. We do have a simple appointment process, so we set you up for commission and to work with us as well. And obviously, if you do sell a lead, we want you to take. We don't offer a commercial package, so we'd like you to be able to do the package of any policy you have. And if it's not a fit for us as far as the AEO models that we're representing, then feel free to use any other type of program or assistance you want to give that client in workers' comp, and as well. So yeah, I'd like to now kind of open it up for questions. Um, and here's my contact information is on the screen. Please feel free to call me after the webinar, email me to set a time so we can get into more detail about the AEO model. And now if you have questions, if you could put that in the chat bar. Oh, so as far as the commissions to agents, they're ranging anywhere from 6 to 8% of the premium for the life of the client. So now you've got a way to earn revenue. And then as far as premium size, we're targeting 50,000 plus in premium, which is an employer with usually in the blue collar space of like 30 plus or 40 plus employees. Um, so the leads we have are already sort of screened to that employee level because there's not much of the data on the premium in Ohio by employer. But we also will be adding some other programs that will assist with a lower than 50,000. So that's why I say go ahead and send the AC3 form in of any size client just so we can kind of get the model started for you there. PNC agents, have you run into Byberg, which is a Berkshire Hathaway company quoting workers' comp for either your prospects or clients? Well, great news. Insured Solutions, a national MGA, has an appointment that is set up to allow you to quote, bind, and service Byberg at your agency. And the coverage is in all states. It's A-rated. Startups are even accepted. There's 125,000 maximum premium. And some of the tough industries they write are construction, transportation that includes towing and parcel delivery, manufacturing, security guards that are armed and unarmed, motor mediation, and many more. So go to our website at insuredsolutions.net, click the Get Appointed link. We'll get you logins for you and your team and can set up a webinar for training if you'd like. Also, feel free to email info@insuredsolutions.net and I can handle the submission myself, or call 770-402-5343. Be glad to speak to you and give you more detail. Thanks. Um, so again, please do keep throwing these questions. Those are great. So the next question that came in was, will the client be able to keep their current BWC policy if they moved into, let's say, working with ACS under the AEO model, pay-as-you-go model for workers' comp and claim services? And the answer is yes. As part of the AEO, they have to actually allow the client to maintain their current policy number with the BWC. All those claims that are there will stay there. And then after that, on a go forward basis, let's say from the effective date with the AEO, let's say it was 11/1, every new claim would now be part of the AEO policy. You could kind of think of it like a master policy, and that would be managed by ACS going forward. And there's some convenience too, by the way, we didn't really get to, but the client now can just report that claim to ACS. ACS has the contracts with the MCOs, the TPAs, the BWC. They'll tie all that communication together. They're going to be an advocate for you as well if you feel it's fraud. So they can give you just a little extra TLC, as well. Um, and then let's see, I had another a question here. Let me just Oh, yeah. So great question. Can the client leave the BWC program at any time without penalty? Yes. And that's very unlike the national coverages that you may be experiencing, let's say in Kentucky and so on, where the client gets a short rate penalty. The client can exit the BWC at any time, especially to use these AEO programs as well. Um, so that's a great question. And then the we talked about the premium size. Okay, I think we covered that already. The commissions, if someone asked that again, we've covered that too. Let's see if there's anything else. Anybody else have anything that they'd like to cover? Well, great. Well, again, we really appreciate your time. We want to keep this one short. We will, after we get some feedback from you, we'd like to do some more webinars on Ohio workers' comp in general, anything new that's going on with any of the AEO and other programs so that you're armed with information. And again, I would urge you to just test out the process of submitting that AC3 form. Let us show you how the flow of the proposal works, if it's a fit, if it's not a fit. And then also, let's say that you did want to present a client the quote. Myself and ACS personnel can be on the call with us and you and the client once you give permission. And in some cases in person, if it's a larger account, if you'd like, and meet and go through Q&A, talk through the pros and the cons, and then we jump off the call and we're meeting and allow you then to speak, candidly and privately with the client. We're so used to working through agents. We understand this is your customers, not ours. And then from a service perspective, once the client comes on board, there's some forms that ACS gathers to tie in together, the information with, you know, communicating with the payroll company, with the reporting, with making sure that the policies coordinate in terms of, exiting the current BWC policy and going under the AEO's policy number. All that is now handled by Bob and ACS's team, so you don't have to deal with that claim, all the claim activities there. So similar to selling it with an insurance carrier, once you make the sale, and we'd like you to kind of walk through the beginning of the first one if you can, if you have time, just the enrollment part. But if not, nonetheless, the AEOs handle all of the enrollment and the service and afterwards. If there are any problems, they obviously let us know. We then let you know because of the communication that we're going to be the conduit for you. And if anything changes, or there's problem, the only issue we've seen so far is just clients reporting on time on a timely basis, um, or allowing access to make sure that our payment, I guess more about payment. And so that happens quite often, as we know in the work comp world. We'll let you know if there's any payment issues as well. And Bob, can you think of anything else that we wanted to cover at the end here?
No, I think we've got it kind of wrapped up.
Well,
Like I said,
great.
we
Well,
don't want to go too long.
yeah, there's no more questions. We appreciate everyone's time. And again, I'll be in touch with all of you after this call over the next few weeks, and we look for some emails from us as well. And please pass over the recording of this webinar to your team, and I'll make sure to include the original webinar about the AEO model that we did a couple months ago so that you can forward that to your team as well. And please reach out if you have any questions directly as well. Thank you for everyone's time. We appreciate it.
Thank you. Appreciate it, everybody.
Thanks again for tuning in to Insurance Shop Talk. If you enjoyed our deep dive into the latest trends, please don't forget to like, subscribe, and hit the notification bell so you never miss an episode. Until next time, I'm Eric Stein, and this has been Insurance Shop Talk.